Hello, people, YouTube. I know it's been a while, long time no see. Um, this is a concept with the IFVG Inception, and with the I have noted before, like earlier I did, and during the lecture. Um, with the IFVG Inception model is based on the market maker's model, and what it entails is that you wait for pretty much either the external range of liquidity or liquidity pool or internal range of liquidity pool to getting rated first. And this concept works on all markets. You use it effectively with you can use it effectively on the model that you already know that suits you in your trading style, of course. These are the fib settings right here. Right here. And yeah, right here. Screenshot it, do whatever. Uh yeah. Okay, now okay, pretty much what you do, use the top down analysis like I said earlier. Pretty much you wait for the higher time frame rate and liquidity to take place first, and then you scale down to one or two different time frames at the same time, or at one at a time. You use two time frames. Really, I like to use three time frames before I use one, as you can see here noted. Okay, base. Here's a rundown. Right here, there's a white base still upon. So pretty much, if you want to trade the 1 minute, you want to look for something on the 15 minute. Really, out of me, I like to use the 20 minute. But in this case, a 15 minute. If you want to trade the 5 minute, use the 1 hour. I say you can use 1 hour, 30 minute. That'll work. Pretty much as long as you have the higher time frame. Or for example, if you want to trade a 15 minute, use the 4 hour. You can use the 1 hour or the 30 minutes, but you see where I'm going with it. But in this case, I'm gonna stick with this concept that you got the higher time frame and alignment. Oh yeah, here's what I mean. You can use the 15 minute to find what's going on in the 1 minute. To enter on the 15 minute, you use the 4 hour to find out what's going on in the 1 hour to enter on the 4 hour. You use the daily to go on the weekly. Vice versa, you use the 1 minute to enter on the and find what's going on in the 5 minute. And the 5 minute, you use what's going on in the 15 minute. You know, in the 15 minute to the 1 hour. Or you could do it this way. You use it. If you want to find what's going on in the 1 minute, use 15 minute. If you want to find out what's going on in the 5 minute, use 1 hour. And if you want to find out what's going on in the 15 minute, use the 4 hour. Daily, of course, use the 1 hour. And on a daily, use the 4 hour. And then on the 4 hour, use the weekly. And you want to know what's going on the weekly, use the daily. If you want to go want to find what's going on daily, use the monthly. If you want to find out what's going on with the monthly, use the quarterly, then and yearly, so on and so forth. Now I'll give you a few examples of it. Okay, right here, there's an entry on the external liquidity. Right here, as you can see. Then I dialed it down, I think, to the 1 hour, which is the external, and then I drew another fill to pretty much another fill to that level right there. And then you see the gap right there, and what I do, yeah, it was a 15 minute gap. I think 15 minute gap. And then I draw from that order block. I enter off the last bullish order block around the 25%. And then right here, same for the seller's example. Yeah, you could go as far. Okay. Now I'll give you the steps to the external. You can have at least 32 time frames, like I stated before, technically. But I'll stick with 3. But yeah, it was kind of early for me, but I decided, wanting to speak during this time of day, just get my day out of the way. Okay, the 25%, use the 25% because it holds most of the entry, and then use the 50%. I'll say the higher time frame, 50% to take profit, or use the equal highs, relative equal highs for your take profit levels, or take a partial profit. The goal is you want to at least use a 1-to-1 risk to reward ratio, but really you want to go for 1-to-2. I'll say 1-to-1 realistically. But if you can get a 1 to 3 reward, more power to you. Plain simple contract. At this point, you shouldn't be at a profit. And if so, it's on the trader, of course. Like if you're out of profit, that's on you, the trader. Now I'm gonna send more a couple of examples here. Okay, this is the order block, right on 25%. I mean, you can't necessarily see it correctly because it's mixing with a whole lot of time frames. But this here, as you can see here, is the 25% I'm speaking of right here. And this is the last bullish order block. You came in, get the pullback. Now I'm gonna do a live example for both the buyers buying and selling. Oh, that's why I was on the scalp. Yeah, there's a steps to the internal pool liquidity. You can use 3 time frames for top down analysis. For the last time frame, you use an entry criteria. You'll look for pretty much a rate on liquidity on the 25%. If you're looking for an internal range of liquidity. But I'm gonna give a rundown, an example. You know what I'm saying? Also, so yeah, sometimes I take out the lower time frame fibs, just make my charts look a little cleaner and that. But as long as it gives me what I need for my entries, and next I'm good to go. But it's like I said, it's based on what's going on from the higher time frame to the lower time frame. And the neat thing about it is, yeah, you can see that fair value gap come in, create itself, liquidate, you know what I'm saying, and then give you that entry, give you that, just gives you what you need within that trade, I'll sort of say. And you can't, beat that in a sense. Okay, I'm gonna give an actual rundown. Yeah, a few minutes rundown and then go from here. Okay. I don't know how I'm gonna start going about it, but okay. Here's what I'm saying. I'll take this out, take this out. I'll do one for a sell and do one for a buy. Let me scale up to the higher time frame, like the 30 minutes. You can do it. You could use the daily, you can use the 4 hour, so on and so forth. You don't have to, limit yourself to a lower time frame. Okay, I was thinking to myself, I seen the gap, and I seen the fair value gap. Well, it's not. I ain't gonna call it a fair value gap. It's not an exact fair value gap. No, it is a fair value gap. What was the fair value gap in the order block? So this is where I got this from. This right here. Slow it down if you need to. You know what I'm saying? Speed it up if you need to. This is right here. This is the gap right here. Yeah, this is the gap. Okay, right here, that's the gap I'm using. Okay, now I use the fill. Pretty much this high, this low for the buy. This is for this is the bearish. This is the bullish example right here, and I'll show a bearish example. So I draw the high, that low. These are the open candles, of course. This is 6 p.m. open and midnight open. Now go from right there. Yeah, I think I put that in the chat on the how I got the buy. This is how I got the buy. Let me take that out. Yeah, the wick was insane. Yeah, I was suspecting something like this would go down. Then I looked, then the lower time frames affirmed my bias. I actually did it 2 times. Oh yeah, and one more thing I forgot to mention. Also during your fibs though, it's effective 2 times. After the 3rd time, you don't want to use it. It's like a W pattern. Yeah, if it's 2 or 3 times, unless it happens on a higher time frame. But 2 times is the max you want to use it. Oh, never mind, it only happened 1 time. But yeah, if you get what I'm saying, you get what I'm saying. Okay, now I'll dial it down to 15 minutes just to show what I'm saying. See, what do we have on the 15 minute? We have the same thing. Pretty much I do the same thing again. screenshot it. Like I said, I'm gonna go highlight it. Yes, you can use it with SMT. So yes, you can use it with SMT. Right here, there's the gap. Right there's fair value gap. Or so that goes to show you, yeah, you could get caught up in a liquidity void. Right here, fair value. Okay, so I go erase all this. I'll be able to do like a rewind system. Do like it's not gonna be a part 2, but when the time comes, I'll get a live trading view system or work a back test, go back in time and play it out. I mean, once you trade it, you'll see what I'm saying. Okay, so right there is a lower time frame. Now, okay, now how do you find the 25%? You download down to a lower time frame. This is what I mean by you want to get in on the lower time frame. I mean, you can use the third one, but I don't want my charts looking crazy, so yeah, this is good enough as it stands. I believe I may have to even use the 1 minute. I think I had to go. Oh wow, you even see a divergence, but it's not the futures data. I already look for the futures data to use the CVD, but in this case, the CVD worked. Oh, telling you what, there's a divergence in the play. Well, not even, I guess SMT. I said, I guess it's not exactly SMT. SMTs will use two different assets where one asset takes out the other asset first. I guess it's like a deeper way of looking inside of the market. Okay, so from what I see, from my understanding, this is the last, yeah, they pretty much is the last one, a bullish candle right here on the 25%. Bullish order block, you may call it. Yeah, the liquidation, of course. Put order block. I'm just gonna type in order block. Order block right here. Really, I would like to highlight the bullish candle, but I'm gonna put it right here, the whole thing. I mean, this could be counted as an order block, but this is an order block as well. Came in, broke out of it. It didn't even tap it or into it or anything. It just broke straight up out of it. And then I look at the higher time frame, 25% order block, I believe. No, at that point, just use 0%. Okay, where's that 0%? Oh, okay, this is 0%, and this is the 25% I talked about. Okay, right here, this is the 25%. Came in liquidated. Is a higher time. This is a 30-minute, I think. Yeah, 30-minute, 25%. Yeah, I know that for sure. Okay, let me see the last bullish candle. Here's the last bullish candle right here. To hold your trades, like you got the first one for your entry, and your first TP already is hit, initial TP. This is something that doesn't happen every day, but it just so happened today. Is the discounted order block. And I'm gonna show the premium side of things as well. Oh yeah, then the internal pull. Well, the internal pull it doesn't happen for the. No, for that I already use a higher time frame, like a 4 hour or whatnot. But if it happens within 4 hour, 30 minute, and I get something from the internal to 15 minute, why not? Discounted order block. Good discounted order block. Yeah, I guess it's another way you can say where I can find the best premium or discount entries right there. She had 2 entries, but the main idea is using this as your entry. we go. Put my risk to reward charts, and then you aim for the higher time frame 1-to-1. Or once it hits, pretty much it hits and breaks that discounted level, you trail it. Okay, I protect the long position from here. Oh, also you put the stops. Yeah, you could have like a tight stop. Alright, underneath the box or the wick. I give you 20 points, you could have like a 10-point stop. But I'm more comfortable with the 20-point stop. I mean, that's still good, even 20 points or 30 points. 10-point stop for you could risk to reward to make 40 or 50 points, not bad. Yeah, 40 points right there. Based on the higher time frame, based on my rules. Or you can use the 1%, or use the equal highs. Or if you just trailed it for the rest of the way of this session, you're good to go pretty much. Or use the 1.5, you're done. You made 100 points right there. Okay. Now, so a seller's example, then I'm gonna be done from here. Remove the drawings, start over. I'm gonna be on another asset, but I'm gonna show a seller version of it first with NQ. Okay, here we go. Okay, there you go. I see a possible seller's model that could come into play. You could look for internal range of liquidity. Oh yeah, okay, this is my moment to shine. When I speak of the internal liquidity pool. Let me see here. Yeah, this is a gap you can use. Not the strongest gap, but especially after the close though. Okay, so draw that. Okay, so I have to draw from that high, that wick of the candle. Okay, this candle right here, all the way to that candle. Yeah, so if it comes in, liquidates that, you can see you can expect some sales coming in from within the market. But there's a way, I'm gonna say circumvent. I'm in the 30-minute with it, but you can use the 4-hour or the daily. But I'll show that how you can use a daily and the 4 hours. It's the same thing. I mean, you could have a greater risk to reward within your trade. Can't go wrong with that, as you can see. Oh, and an example. Okay, so say I go to the 15-minute. Let's see. There's nothing on the 15. No, I gotta see that liquidation. Yeah, see liquidation from the 25%. Hold on, let me go back to the 5-minute. Not ready at the 1 minute. Okay, so right here. Okay, yeah. I'll justify that, but how you was gonna catch that, I don't know. Yeah, you have to focus on multiple time frames, like 2 or 3 time frames at a time. Well, you don't have to do that. So pretty much is a sort of like a time frame matrix. This is the gap. Like this gap right here. Right, I can't go no lower on the 1 minute, but you can go on the 30-second get like a sharper sales. Yeah, once off my trading view, I'll go to 30 seconds just to show how far you can really take this. As you can see right there, you did a liquidation. May I imagine you on the 30-second chart. You was already gonna be in the sell the whole time. Now, okay, here we go, 25%. Like I said, now next thing is you find the order block on the 25%. A premium, and you get the most premium type of order block you can possibly get. Okay, and this is the internal pull that was taken. Okay, right here. Yeah, this is the premium right there. Like, I all want to see it go on in there, boom. Like, you know what I'm saying? Because the money moves as soon as that liquidity is rated. You know what I'm saying? You need a pullback. It's like a slingshot. You need a slingshot in order to get that momentum. Without the slingshot, you won't get that momentum per se. So here we go. Premium right here. Premium order block. Now I just wanted to show the interaction. The same thing for the discount, pretty much. Premium order block. No, this is all internal. There's not an external range of liquidity being taken. Hit the 25%. This is your trailing stop level. Okay, so see here. And I think I don't know, I'm gonna implement like a 50% rule with a premium or discount order block. I don't even need to stop that. Oh, in this case you could use a 10-point stop, or probably even a 5-point stop. You know what I'm saying? Now you target, the sales already happened. I don't like to really trade this session. Session is trash to me. But that's just my opinion. I do as I will. This is a 1.5, and there's a higher time frame. Yeah, I guess you could take a good 30 points. And I mean that doesn't sound bad for the session and for what it's worth. Oh yeah, take profit's been hit. Or you take 40 points. But 1.0 or 50% or 25% take profit. Oh yeah, there's a higher time frame, 50%. I think it's a 30-minute. Yeah, there's a 30. No, my bad. I forgot. 15-minute. Hold on, let me see something. Oh yeah, this is the 15-minute. Yeah, the 15-minute. 50%. Yeah, you use a 15-minute, 50%. You take profit. You're out of the situation. You're out of the market. So pretty much waiting for what's going on for the lower time frame to happen first, and then the higher time frame to happen last, pretty much. So this is like an MMXM hack of trading, life hack of trading. I can call it the MMXM or MMSM life hack of trading. Okay, shoot. Now I see a possible buy model. I see a possible sell. I mean, I could either do within the trend or out of the trend. Reason why I like to use a higher time frame, because if I'm doing it out of the trend, I can at least get my 50%, which is almost like 1-to-1. 1-to-1 risk to reward entry that I keep speaking on the whole time and whatnot. Okay, I'm gonna look at another asset. Sure, look at crude oil. It's the same with crude oil. I gonna say, it don't matter the asset. It's the same thing. It's almost like I said earlier in the chat. It's almost like you could see the conversation of what's going on in the market. It's almost like you can see and peep what conversations you like. You can read conversations. Like, this is different. This is how different I deem it to be. It is to me. I'm gonna go as far as a 4 hour order. Let me see the daily, just to show you what I mean. Okay, here we go. You got a liquidation during the daily. Well, that was so abrupt. Oh, you didn't have the liquidation until that point. Okay, no, not long. I'm trying to get the fair. I'll get a short example, and this is the external pull. So anytime price hits the zero on the higher time frame, there you go. You got an external takeout. If it doesn't happen on the external takeout, you're going for the internal takeout. But you want to make sure when you're doing that lower time frame, you get that same takeout from the lower time frame fill. You know what I'm saying? You want to make sure and that it's a gap. I'm gonna show one for a buy, and then a sell, and then I'll be done. Alright, then I dial it down to like the 4 hour or the 1 hour. Just as I said, based on the MMSM or MMSM methodology, this is where my base is. This is what I'm basing it off of. I don't know, this sparked a light bulb in my head. I was like, oh wow, it makes sense. It's sort of like how, like, you don't know the situation, but it's like a gauge cluster. Like, it gives you the information. Like, okay, yeah, this is like a gauge cluster. I guess that's the best I could describe it. When you need to go and get gas for your car, right? It'll let you know if you need to go and get gas, if you need to add coolant. You know what I'm saying? Yeah, if you don't take care of it, then that's on you. And what I like about it is if that kind of armor turns bearish, you can go before it reverses on you. And pretty much you can see, yeah, and that's game changer, you know. I've seen it played out in real life. It's like, wait, I could do that? I mean, shoot, if I could back test what I'm talking about, I know exactly the time and day. I think that happened with Bitcoin. You know, hopefully a person can see what I'm talking about, you know, but you know, this is what it is. Okay, now I go right here. Let's see. Okay, yeah, the internal takeout, but nah, I had the external takeout. No, I want to go as far. Yeah, I go as low as a 1 minute. Yeah, I like it better on the one because it gives me that yeah, it gives me that edge, that clean, that clear edge. Oh, yeah, it keeps me that, and that's why I like to use a higher time frame. The higher the time frame, the more I can get into that liquidity rate, liquidity pool rate zone. It's a liquidity pool rate zone. You know, that's why I want to use a higher, because when I have to go on the lower time frame, I don't get that good discount zone or good premium zone. Okay, so here we go. That 25%. Okay, what's the nearest discounted order block? Okay, right here. Yeah, this would be the nearest discounted order block right here. Yeah, this is crude oil, by the way. Okay, so give you the one time tap, second time tap. Yeah, this is days pretty much, by the way. This happened so many days ago. And then use a higher time frame, 25%. Yeah, if I want to really. Okay, that's 0%. Here we go. It was the greatest discounted 25% on the higher time frame. Now I'm gonna use that this sort of like a trailing stop almost. Look at right here. Yeah, I'm gonna implement that as a rule where okay, once you have that from the lower time frame, 25%. Now I use that higher time frame 25%, sort of like a trailing stop. Okay, put discount order block. discount the order block. And then right here, higher time frame, HTF, discount the order block. Yeah, you can use a daily, and really look to hold. If you use the daily, there you go, respects that. Sure, you'll be deep in profit pretty much. And then you target a higher time frame, 50%. So pretty much you went to that 25%. Oh, okay. You can turn to 50%, but in this case, long position. Yeah, this could be a long position right here. All up to here. Not bad. Word to word, it should show me. Okay, 1 to 2. Yeah, 1 to 2 word to word, not bad. Or I can use 50% of the order block. Me want to intersect on the 25%. I mean, now I got the order block, so use 25% or half the order block. Okay, right there. That's a 1 to 9. I mean, that's it is a tight stop. Wow, it's a smaller stop. I'm not even. Yeah, and this is the 1 that I ain't even scaled down to the 5 minute. But let's say I want to use a 5 minute. See, this is why I say I like the lower time frame. It gives you, you know what I'm saying? It gives you that. I mean, higher time frame because it gives you the opportunity to enter on the lower. But I'm talking about the hour though. So, yeah, pretty much. But I ought to be prepared for it. It's just an example. It's the same thing, so on and so forth. I mean, pretty much the higher the time frame, the more you have to wait. The lower the time frame. Oh, but the thing I like about it is it gets you in trades. Yeah, I got so much I could look at. So after, it's ridiculous. I'll give out a seller's example. Okay, I'll give out a seller's example and then go from there. I know, I'm sorry. It's been a minute. Wow, this tells me it's been a minute for a while. Okay, we give like a seller's example and then I'm gonna be up out of here. Like I shown, what goes on from the internal and external pool liquidity. Now I'm gonna show a higher time frame seller's example and go from there. Well, in this case, I use a high entire frame. Okay, right here. Let me see here. Oh, also the 3 legs though. So price keys. You know what I'm saying? Tapping into that liquidation. Oh yeah, nah, it will get you out already. But if it does that, that's why you wait on the order block. That's why I have the 25% order block rule. Okay. Now this is the daily. There we go. I scale it down. I mean, it's the daily I'm talking about. Scroll down to the 4 hour. Yeah, as you can see, it's a lot. No, it's an example that, yeah, you go with this framework on a higher time frame as well. Okay, here we go. I dial it down. There's the daily. Oh, okay. Gave you a TP1 for the daily. Yeah, the daily fib zone, fib level, pretty much. But then again, you're looking at 200 something pips. if you trade forex. Well, not even just forex in general, but yeah, when it comes to trading oil. Okay, here's how I find the order block. Same thing, same story. This is pretty much the premium before the takeout. Like sometimes you don't have to have the takeout hit that 0%, but right there, as long as it respects that premium order block. Premium order block. Right here, this is that premium order block I talk about. Here we go. If you tapped one time, it tapped the second time on our order block, gave you the liquidation. Let's say I further dial down to the lower time frame. If you want a greater premium entry, here we go. Oh Lord, should have had the lock button on it. Nah, but good thing I could just hit the reverse button. Here we go. Oh, I didn't even put the 1 hour, but that's okay. Okay, here we go. Okay, so both the premium and discounted. Yeah, after this, I would have been done with my explanation. Okay, move that over to the side. I gotta draw the 15-minute. I don't have to. I have all the information I need. No, actually, yeah, pretty much. Okay, here we go. This happens every time. Like once you see it, you'll be like, oh, this is what you should do, or this is what you should do, shouldn't do. Okay, I'll dial it down to the 5-minute. I use all 3 time frames. This is why I say, oh yeah, this is a great example of what I mean by the higher the time frame, the better. I'm gonna review it. Yeah, if you don't quite exactly understand it, go back, rewatch the video, put it in high speed if you got to. You know, if you got to. But as long as you understand the point I'm looking to make or expound upon, that's all that matters. Okay, so let me see here. Here we go. There's a 5-minute OB. Now I gotta find the 5-minute premium. Okay, you got the takeout right here. Okay, it was the closest one from the 25%. Okay, I'm looking for one though. The best one now. Okay, I'll use this one here. Yeah, this is the order block I'll use. 5-minute order block. Yeah, it sits at that 25%. Yes, I can go on away from the 25%, but I don't need to further refine it because this is based on a daily. I don't need to further refine my entry because I know what's going on a daily. Premium order block. On a 5-minute. Okay, I think I got all my explanations. Oh yeah, and you can hold this for days almost. Oh yeah, pretty much, which is 2 or 3 days. Here you go. Hit your entry 25%. You can enter right there. Well, it's not necessarily a tap. It's a breakout. You can either trade the breakout or a tap. But the liquidation, like I stated before, already had happened, transpired, and this is the higher time frame order block, and this is the lower time frame order block. Yeah, you can go. Shoot, you can have a tight stop comfortably. You know, shoot, people having wide stops. Yeah, the risk reward is can go insane. Okay, So I sold the premium, I sold the discount. I guess okay. I saw one more premium side. Oh yeah, Bitcoin, right? Earlier in the chat, I was saying something that Bitcoin was gonna buy up, and guess what? Bitcoin bought up. Now I was focusing on the NQ. I ain't know when exactly it was gonna go ahead and do so, but it just so happened to do so. Oh, it came in, retraced down to the downside, of course. Oh, this is the one I talked about. I mean, I didn't participate. I was in drawdown though, but by the time I hit my take profit, okay, so this is where I came in. Okay, I removed the drawings from here. I've been defining it to play out during the daily, I think. No, it was not even on the daily, it was on the 4 hour. Okay, I got it from the 4 hour right here. That was a oh snaps from the buy. Oh snap. I'm in the sell. Well, I'm not gonna further explain. No, I'm gonna sell my MetaTrader account. That's crazy. But I'm gonna focus on here. Okay, see the 3 candles right here, the gap. Yeah, if I dial it down to the lower time frame, I probably could see why the sell happened. There you go, you had a liquidation right there. Scale it down to maybe the 5 to 15 minute. Actually, it's so simple. Well, I believe it to be simple. I don't know if people will find what I'm trying to show to be simple. Alright, now I'm trying to, okay, I might use the 1 minute on this one, because I want to, get as close as here. If I can get as close as here, I'm good to go. I'm a happy camper. Then it's crazy, it's sort of like bending the rules, but I am usually utilizing the time frame matrix in a sense. Oh yeah, but yeah, the idea anyways is to take what you need. Okay, Fed retracement. Okay, right here. Oh, I'll use it. No. Okay, I find what's going on within the 5 or 15 minute. Okay, I use a 15 minute. What the? I didn't do this. Hold on, let me. Yeah, it's doing this though. I don't know why it's doing this. Unnecessary stuff. I didn't do this. Okay. No. Here the field. Okay, right here. Okay, now let me go to the 15 minute or the hour. Okay, refine to the hour. Nah, I need 50. Yeah, 15 minutes the way to go, or 30 minute. One of those 2 time frames. Okay, yeah, 15 minutes is the way to go. This okay, get the 15 minute. Alright, scale down to the 5 minute time frame, or the, in that case. Okay, better. That's so much better. Now I want to look. So oh yeah, it's an internal pool of liquidity. So pretty much I want to use that 15 minute internal pool of liquidity and draw a fib on there. Okay, so that's what I want to do. A 1 minute. Or in this case, I use the 1 minute. Here we go. Use a 1 minute internal pool of liquidity. Right here. There we go. There we go. I further refined it. Okay, let me find out greatest discounted entry. Oh, you know what? I can use that 0%. That 0% matches with that 25%. I on the 30-minute, I believe. So, just that last bullish candle right there. Let me zoom in to show what I'm talking about. I know the buy already had happened. Is that bullish order block right here? Well, this whole thing is an order block, but I really like to mark up the bullish candle. The order block right here. Discounted. Order block. Yeah, no, it's hard to make this long. I just want to make it understandable as I can get for people to see right here. Yeah, it would be crazy if it buys right off that. Okay, right here, it matches with the 25% of the higher time frame, of course, and then you can find that same thing here. Pretty much same idea. Oh, pretty much you already know what to do. It's the same thing that I just did right now with the premium discount order blocks. So right here, you come here. Again, you have a tight stop. I mean, you're having tiny stop losses. You're not even having huge stop losses going on. Right around the 25%. Right here, you target there. The higher time frame, 50% is a lower time. So on and so forth. I had Metro saying that we'll stick it with the lower time frame, but it didn't even look to go on the higher time frame. So I don't know what type of cans of worms I've opened with this, but I'll do a miniature review. What is this based on? Based upon the time frame matrix. The main idea, I'll call it market makers model, pretty much. Yeah, it's like sort of like a life hack to the market makers model, and then excuse me, then levels to the fibs right here, 0.25 right here, one to get pretty much to the 2.0 fibs and the 3.0 fibs right here. I showed on the better screen, better view. This the fib settings. I don't know why I didn't even. I showed it during the presentation, but these are the fib settings. I'll put a link to the fib settings so you guys can use it, so you can skip to it and then go back to the intro. That's all. Any questions and answers you need, let me know at the comment section. Thank you all for coming out. Thank you for even watching it. And that's all. Please like, comment, and subscribe.